Welcome into another episode of Everything is Logistics, a podcast for the thinkers in freight. I am your host, Blythe Brumleve, and I am proud to welcome in Burak Cendek. He is the partner at Autotech Ventures, and we're going to be talking about the relationship between venture capital and logistics. So there's obviously VCs have had, been in the news a bit as of late. So I'm excited to dive into, a lot of, I guess, the surrounding culture and investment strategy behind VCs, but also specific to the freight industry. So, Barack, welcome into the show.
Thank you. Thanks for having me. Looking forward to our conversation.
Absolutely. So we first met back at Manifest and we did a quick, like 1 minute logistics interview. And
That
you
was
were
fun.
so great that I was like, we have to get him on the show for a full length discussion. And as I was doing research for this show, you have such an interesting backstory. And you essentially went to school, you grew up overseas, you went to school in Turkey before arriving to the United States. Now, I imagine you could probably tell this story a little bit better than I can. So give folks who may not be familiar with your background, give them a sense of your journey into coming to the United States.
Yeah, absolutely. So, I'm originally from Turkey. Grew up there and came to the United States for college. Went to Caltech, studied electrical engineering there back in 2000, a long, long time ago. And then graduated in 2004. And actually, my first job was engineering, and I joined Electromotive Diesels, manufacturer of heavy haul diesel locomotives. So started from the transportation back then. Did that for a couple of years and then switched to management consulting in Chicago. Worked for a strategy consulting firm for many, many years. And then had a couple of my own startups, all failed. So learned what not to do, and then got my MBA from University of Chicago. And then I got into the world of startups and investment through that. I started an accelerator program with my partner in Chicago back in 2012, 2013, bringing foreign startups to the US market. So these are successful entrepreneurs from overseas that have a product or a service that is also suitable for the US market, and we help them with fundraising, go to market, hiring, business development, everything. Think of it like Techstars or YC, but for foreign startups. So did that for a couple of years, and through that I was traveling the world quite a bit, and then built relationship with several VCs and decided to join one of the leading venture capital firms in Turkey. So moved back to my home country in 2016 and invested in startups in Eastern Europe and Turkey. And at the end of 2019 decided that it's time to come back to the United States, joined Autotech Ventures, and I've been there since then.
So were you familiar? I imagine like going to school and then moving back. So you were pretty familiar with sort of the logistics infrastructure of Turkey. Is that a safe assumption?
A little bit. I mean, other than just like those 3 years as a VC in Turkey, all my professional life, educational life have been in the United States. So I wouldn't say I know it too much, but I know more about the US market than the Turkish market.
Yeah, we about 2 months ago. I mean, obviously, this is a little bit. I don't want to say like obviously it's a downer, but the devastating earthquake that hit the country. We actually had a guest on the show that talked about the disaster logistics going on in Turkey and how it affected the ports and the delivery and how they basically have to find an airport that's closest to the port in order to get supplies in, and they have to prioritize that because without supplies they can't help anybody that's affected by the earthquake. And so it was just a fascinating interview. So I wasn't sure if maybe you were familiar with the logistics infrastructure of the country beforehand.
Yeah, not intimate, but like it's Turkey is surrounded by seas,
Mhm.
on three sides. So you would imagine that they would have taken more advantage of that, like because of the earthquake, like the land and all the road freight is a little impacted, and so air and sea was the definitely the key parts of the logistics for that earthquake.
And so you're so, I guess going back to, with the United States and how you're here now and running a very successful, LP firm or is it LP or I guess
Venture
VC?
capital firm. Yeah, I can tell you a little bit about that actually. So we are a venture capital firm, early stage. So we invest in technology startups, early stage startups. So mainly seed and Series A. So these are like typically already have a product or a service and generating some revenue, and different than many other firms, we are a sector specific firm. So we only invest in ground transportation related startups. So we don't invest in like games, health IT, crypto, just it has to have a relevance to ground transportation. So it
Hmm.
can be about manufacturing, supply chain, logistics, all the way to EV, AV stuff, and repair, insurance, micro mobility, shared mobility, but all have to do like everything in ground transportation. We have more than $500 million under management. We have a new fund, our third fund, 230 plus million dollars. And yeah, we are lucky that in this environment we have fresh capital and we are actively investing currently.
And when you say the third fund, from what I understand about, I'm very, I'm an entrepreneur, but
Yeah,
I'm
yeah,
very new to, my education comes from Shark Tank and the All In podcast. So that is where my educational level is set. So when you say the third fund, that means it's almost like I guess separate bank accounts that you have that you're funding businesses from that one account. If that
yeah. No, no, yeah, absolutely. Let me get into that a little bit. So you start with your first fund, which is typically like for a venture capital firm is the most difficult one because you
Mm,
are like new, like people need to trust you. Why should we trust you? All those questions. So you are new. So you do your first fund, and then what happens typically is like you have a specific time period where you make new investments. Let's say like 3 years, and of course then you reserve a lot of the firms reserve some of their capital for follow-on investments. So if a company in your portfolio is doing well, you want to invest more and more and more to keep your equity. So you have like let's say 2 3 years to make new investments. After that point, you need new money, a new fund to continue making new investments. So typically, like every 2 3 years, you have a new fund and you make new investments from that fund.
mm.
And there might be some money left in your previous funds, but those are like specifically just reserved for the existing investments of that fund. So now we are on our third fund. Our fund one and fund two are making follow on investments into the portfolio companies that are in those funds. But new investments all come from this new fund, the third fund.
And so when you are, so it almost sounds like anybody can be a VC. And then so you just have to almost like get people to trust you with your money. Is that, I guess, a simple explanation?
So a couple of things like you need to have a track record. Like the fund might be new, but the partners, the investors of the fund have a track record,
Hmm.
so they can trust you. And then also like a strategy. So our whole thing is like as I said, sector specific fund. We have been building this ecosystem around ground transportation. So majority of our LPs are top global ground transportation corporations. So these are like car manufacturers, truck manufacturers, parts manufacturers, logistics companies, trucking companies, large dealer groups, auction houses. So those are our LPs. And the reason, one of the reason, obviously, like there is the financial returns, but they invest in us for strategic benefits because they want to know what's going on in the startup world. They want to build partnerships. They want to invest alongside with us. They want to do projects with them, maybe become their supplier, maybe acquire them in the future. So that's one thing, the LP side. Then also we have the extended network. We probably know everybody in ground transportation. And then there's the talent piece. We have a head of talent and we have a talent pool specific to ground transportation. So, like, do you need a new head of sales? Do you need a new CTO? Do you need marketing people? So, with us, you're not going to get a pharma sales rep, right? So, you're going to get someone who comes from the industry. So, we help our startups and our founders with we call it portfolio services with their hiring, fundraising.
Mm.
Oftentimes, for example, generalist VCs like to partner with us because we bring the subject matter expertise to the table and the network. So we help our founders and startups with, again, fundraising, hiring, business development, channel partnerships, supplier relationships. So that's our strategy. Like we've been working really hard to build that ecosystem that a non-sector specific fund wouldn't necessarily have. So that's another like advantage of investing. If you want to focus on transportation, uh, that's another reason to invest in a fund like us.
Is that common among, other investment firms to follow a model similar to auto tech?
Yeah, no, good question. So there are a couple of other examples. There's, for example, one in the real estate world. There are a couple of in fintech world. There are like ones that are like very specific to supply chain. There's there are ones who are specific to climate. But I believe like the or if not one of the largest ones in ground transportation.
It sort of goes back to the saying, like the riches are in the niches, and this niche just happens to be something that the entire globe needs,
Absolutely.
and that's it kind of echoes a big reason why I media wise, podcasting wise, I chose this, and not because I had previous industry experience, but I came from like a sports and entertainment background, but nobody was doing, hardly anybody was doing podcasts and logistics, and that's a hell of a niche to be a part of, and I use it air quotes there, logistics,
And it's a huge
niche.
niche. Like it's not
Right.
like it's a small. It's a huge niche. Yeah.
Right, and there's so much. I feel like I need to clone myself in order to cover all the topics that I wanted to cover. But I did want to go back to one of the points that you had made earlier when you said that you had had a couple different startups and they had failed. Why do you? So first of all, I guess what were the big learnings that you had from those startup failures, and how do you think that that helps you with your investment decisions you make today?
Yeah, no, great question. So I had two main startups. One of them was a services marketplace, and another one was actually like so unrelated. We were making shot glasses made out of ice and selling them to bars. So you would put them in a small freezer on the countertop, and like it would be stuck with shot glasses
Oh, no
made out
way.
of ice, and like you would share the shots from those. In any case, in both of those things, I think the biggest learning was like I started both of these as like side hustles, like as my with my full time job, and that's I think the biggest thing. Like if you want to start a startup, you need to do it full time,
Hmm.
and then that means that you need to have the conviction to do it full time, like to conviction to leave your full time job and join or sorry do that startup full time. If you don't have that conviction, and if you don't have the if you are not comfortable with leaving your full-time job to fully dedicate yourself to startup, you shouldn't do that anyway.
Hmm.
So that was my big learning from that. Like I try to do those as side hustles, and I tried to take some time off, focus on it full time, but I guess I didn't have the conviction to like burn the bridges and go all in. And if you don't have that conviction in you for your own business, you probably shouldn't
Oh
do it.
wow, yeah, that's really insightful because I think that going back to, I guess, Shark Tank for a second, that's really one of the bigger warning signs that a lot of the group will give, is that if you're working another job, who else is going to be working this full
That
time, and they
too.
want to know that their money is being taken care of.
Yeah, that too. Exactly.
And so when you go through those learning phases of failure, and how failure really is the greatest teacher as far as business is concerned. So we've also kind of entered into a place in the market where the growth at all costs is kind of out the window, and it's all about profitability now for business operating. So how do you, I guess, shift that mindset from your investment tactics? Because I imagine that this mindset has kind of impacted in the middle of that, or I guess this new profitability mindset has impacted in the middle of that growth at all costs mindset. So how do you sort of balance the two with the investments you're making today?
Well, first of all, we were never in that mindset. Like, so if you
Mm.
look at our portfolio, there is not a single business where we are like, okay, it depends on that growth and growth at all costs, and like it can only survive with the VC money. Like all of our investments, of course, like you need an investment to build your product and to get to a certain point where you are cash flow positive, but all of them at their unit economics or contribution margin wise, like profitable businesses or have a plan to be profitable. So, and we on purpose stayed on the sidelines on some of those trends. Like, for example, like when micromobility was really trendy, like the scooters and whatnot, we stayed away. Like, we didn't touch any of those. After that trend fizzled out, we made micromobility investments. While we made investments in two companies that are, again, their unit economics, their profitability were very strong and positive. So we were never one of those investors, and we remain to be the same. Like we look at our businesses with that lens. Does this, when you look at the unit economics, when you look at like, okay, you are burning the money, but what are you burning that on?
Mm.
Are you burning that on actual for building the business, or are you burning that money to acquire more customers and like you acquire a customer for $100 and you make only $10 out of that, like you are losing $90 on every customer. So we
So those
definitely
unit economics
continue.
wouldn't work, right? In that
Exactly. Like
example.
there's
Okay.
no way that like in order to keep growing, you need to burn, burn, burn. But it's okay that like you spend $50 on a customer, and then maybe like in a year you make $100. That's fine. Like you're gonna burn that $50 in the beginning, but at the end of the day, you're gonna start making money, and that customer is gonna start contributing profits to your business. So we remain disciplined in that sense, and we continue to invest in businesses that have positive unit economics.
And so when I guess you're analyzing a lot, what how many business pitches do you get a day?
Good question. So on average, like and we keep track of this continuously. So currently, at an annual basis, we see more than 3,000 companies, new
Oh
companies.
wow.
And then we probably get like 2,000 updates as well from like companies we were in touch with earlier. And we are proud that as a sector specific fund, like we want to be the first call for any founder that is starting a ground transportation related startup, logistics related, trucking related startup. We want to be the first call, so we want to be able to see everybody, everything happening in this space. And like we keep that statistics, like what percent of the deals at Series A do we see before they happen, and how far in advance do we see that? So we definitely keep track of that, and we improve that year over year.
So with the amount with 3,000
Yeah.
submissions that you're getting each year, what stands out to you as far as like what makes for a good startup? I mean, obviously profitability is one of them, but are there any other signals of what makes for a good startup?
And again, profitability not at the company level. Like, of course, this is a startup; they're burning money; they're not yet profitable. So at an early stage for me, I am very tuned to the team. So team is the most important part of the equation here. Everything else changes, but the team is constant because like nobody would have predicted COVID, right?
Mhm.
But things like COVID comes, new competitors come, or regulation changes, inflation. Like the environment is constantly changing. But you are making a bet on the founder who can address those changes. Like something happens and they can act, react, and change their model and continue executing on their strategy. So, team is the most important part, and then next to that is market.
Hmm.
uh, of course, like it's okay to start from a niche market, but you don't want to invest in a business that is like, even if you capture the whole market, is going to make like tens of millions of dollars. Like that doesn't balance the risk reward, unfortunately. So you want to invest in a good team in a large market, and have signs of product market fit. So like is this product something that large market really wants, and is it flying off the shelf, or are you trying to push it, shove it, into the market? So pull versus push. Like, is the demand, is the early signals there that shows that like this is something that the market really really needs? Again, if it was, that part is a little, it's not very clear, it's not very certain. Like if it was like everybody would have picked winners. So they're like, especially at the early stage, you try to look at the signals, you talk to a lot of customers. We, for example, we have the luxury of having a LP base, our investors, LP base that are potential customers of a lot of the startups we talk with. So we pick up the phone and talk to them. Hey, there is this startup we are looking at. Is this a pain point? Is the product, the service they're building, is this a pain point for you? Would you be interested in using this product? So we try to get a lot of feedback from their existing customers, potential customers, to see if there are early signs of that product market fit.
And it sounds like that's a benefit of the overall ecosystem that you guys have built.
Absolutely. Absolutely.
And so when we talk about, sort of finding, I guess, those hidden gems, is any of those qualifications different for, freight companies, transportation companies? I mean, if that's all you focus on, that's probably the characteristics that you're looking for. Is that a safe assumption?
Yeah, absolutely. Like the difference is there. I learned this early on. Like when I started in investing in logistics space, my one of my first investments as a VC was in a warehouse software, WMS business, and then got into tracking, make some investments in tracking related technology. One thing I noticed early on was a lot of startups uh, are basically tech-enabled brokers that come as technology and software companies. And I was also like in the very beginning impressed by a lot of the growth of these companies that I would see. Like, oh my god, like they are doubling, tripling their revenue. But then you look at it, it's like it's a tech-enabled brokerage. And then you look at that world, that like I think a lot of very successful entrepreneurs and founders and business people build very successful brokerages, but those are not software, those are not technology companies. It's a brokerage, and that's not the business we are in. So that's, for example, like one thing that I learned early on. And I feel like, somebody who is not a sector specific fund, who doesn't see a lot of like trucking related businesses, for example, would definitely be impressed by that growth, and would have maybe even invested in that company without realizing that it's actually a tech enabled services business and not a technology company, not a software company.
I was in that sort of exact situation working at a 3PL like 10 years ago, and we had we had funding from a bank that ended up coming in years later, and the underwriter for the line of credit did not understand an asset-based trucking company, and it was very quickly, I think within a year, that it was one of the many financial decisions that led to ultimately to the company collapsing. But we dealt with that same situation where the fund did not understand sort of the
Yeah,
economics of how logistics works, that if a truck goes down, you're probably out, $500,000 for the repairs and the lost revenue
exactly.
on that one truck alone.
I mean, there are investors who are interested in those type of companies for sure, but not venture capitalists.
Yeah, it is definitely it sounds like it's an entirely, different beast. Now one of the quotes that I wanted to get out because I was reading on your bio is that Autotech is on a mission to solve the world's greatest or solve the world's ground transport challenges. I guess you could add greatest in there too, with technology and realizing the next frontier in mobility. But with the freight market just being so volatile right
Mhm.
now, how are you finding those hidden gems? I guess it's probably one of the 3,000 submissions that you're getting each year that they're almost finding you. It doesn't sound like you have to do much,
Oh,
outward
we
or
do, we do.
outbound
So
research.
let me clarify that. Like a lot of that, of course, like inbound, we get a lot of like leads from or pitches from inbound leads, but we also get a lot of from our uh, founders that we back, our portfolio companies, our LPs, other investors, and then we also do a lot of outreach. So like we look at people who are coming from, let's say, Convoy. Somebody left Convoy and started a startup. Like we identify these people and reach out to them and like, hey, are you building something in ground transportation? Can we talk? or like we see like somebody received an angel investment from an angel investor that is in ground transportation. So we reach out to those companies and see what they are building. So we do a lot of outreach ourselves as well, and then start building relationship and offer introductions to those companies as well. Like it's not just like, hey, I'm Burak, I'm a VC, I have money, like let's talk, what are you building? But like also like, how can I help you? Is there anything I can help you? And then as those companies progress and grow and do their fundraising, then we take a more active role. But coming to your question about like how to identify these germs, so again, like one of the benefits of being a sector specific fund is we see a lot of companies, a lot of activity in buckets, and like after a point, like your pattern recognition engine kicks in, like, oh, something is going on here. Like, we see a lot of smart people spending a lot of time here. What's going on? And we build thesis like, okay, like where is the world going about that specific problem? What do we expect? What is going to happen? What are some of the solutions, services, products that might be relevant in the future? So we try to be a very thesis driven company. So it's not just like a startups come and pitch to us and then we pick the ones that we want to invest in. We actually also come up with thesis, our own thesis in certain domains, and then go seek out investment opportunities that fit into that thesis.
And I think some of the so it was also on that same bio. It says that you invest globally in seed through
Yes.
Series C startups, but it's also around connectivity, autonomy, shared use, electrification, and digitization of enterprise. And the team is also excited about deep tech, autonomous AI,
Yes.
semiconductors, and business model innovations in marketplaces. And so when we talk about freight and transportation,
Yes.
it's not often that you hear sort of, semiconductors and things like that being, a part of that investment strategy. But with your investment strategy also focused on autonomous vehicles as well, I imagine that's where the two of those sort of merge together.
Yeah, so we are not just logistics and supply chain, right? So we do ground transportation, and when you think about ground transportation, of course, like anything related to automotive and cars and trucks come into play too. So semiconductors, like we are investors in the semiconductor which went public and successfully growing. So they were making semiconductors for the automotive industry. We are investors in an autonomous construction and mining equipment company called Safe AI. We are in a company called Verdant that is making autonomous agriculture equipment. So like there are those pockets within our firm. I spend most of my time in logistics. I think compared to all of my partners, I am the one who spend more time in logistics than the others. Logistics, supply chain, and then fintech. So those are like the three buckets that I spend most of my time.
Now, I know that you probably will say like all of them are your favorite, just like, every parent says, like, you're all my favorite children. But do you have, maybe like one or two of the companies that you've invested in that you really see a crazy future, crazy good future for them?
I mean, all of them are like that. I think you are right. Like
You're all my favorites.
all my favorites, but I can tell you, for example, like one of the areas that I am looking. Let's say that I can tell you what I am looking for our next favorite one. For example, like we have
Nice.
been looking into the reverse logistics space, return space quite a bit. Like we probably talked to all the startups in that space. We believe that it's a big, big, big pain point. We haven't made an investment, and we really want to make an investment in that space. So, if anybody is listening to this podcast that are doing anything related to returns and reverse logistics, for example, we would love to talk with them. So that's one area that like we have a certain thesis around that, and we talk to everybody. We haven't found anyone that fits into that thesis yet.
Well, speaking of where you think, the future is kind of going, because we kind of, we recorded that 1 minute logistics video at Manifest, but we talked pretty extensively afterwards about AI and sort of the role of like ChatGPT, like technologies and things like that. So, but where do you sort of see, I guess, AI fitting into the overall sort of freight ecosystem?
Yeah, I feel like we are not even there yet. Like, in order to apply AI or automate things, you need to first digitize things. Like, and we are still like struggling with that, I think, in the industry. And like that's actually like one of the areas that we spend a lot of time, how to digitize existing processes, so that like in the next second step, third step, fourth step, we can start automating those and we can start applying AI to those. So like digitization is definitely an area that we spend a lot of time. We are investors in a company called Clear now with a K. They do customs clearance automation, and it's all about how to digitize all the different documents and processes that go into customs clearance. And we are investors in a company called Neutral that are making freight booking digital. So they integrate with the TMSs of the brokers, and then make those loads digitally bookable to the carriers of those brokers. And so that's one area. And related to that, again, like fragmentation is a big problem in the industry as well. You know, a lot of the freight, I think, marketplaces were supposed to consolidate the market, but in my opinion, they further fragment the market. Like now, like the carrier and the owner operators, trucking companies, they need to call their brokers, but now they need to look at uh, three different platforms, five different applications. So it's like getting further and further fragmented. So without having a layer that enables those different fragmented pieces, both from a stakeholder point of view, like different brokers, different shippers, different carriers, but also platforms, different TMSs, different load boards. Without those talking to each other, it will be really difficult to apply certain, artificial intelligence related applications and solutions. So that's another area that we spend a lot of time as well related to AI.
Do you see a world where, there's like a chat bot on top of a TMS and somebody can log into the system and tell me, the best route for this commodity and I want to backhaul and all that, sort of details of how it really could, I mean, maybe
It
revolutionize the
is. I mean,
industry.
there is this trend, like there is this trucking in a box type of companies on the carrier side that basically promise that, like, hey, look, we're gonna collect all the loads from different load boards, brokers, shippers, bring them to one place and pick the best load for you, and pick the best load for your return trip. Give you the all the accounting, give you all the back office functionality, give you the support, give you the fuel card, also handle your finances. So I think the world is going in that direction, but again, like in order for those type of applications to run successfully, you need a more connected and digital infrastructure.
I think data too is also a big issue and making sure you have clean data. For so long, I've wanted, just the ability from like a marketing perspective, just be able to, market to specific, commodities that are coming in season or, I don't know, Christmas trees are coming up or, can I make a campaign around that? And the TMS software wouldn't be able to tell me that story. I mean, this is 10 years ago. But nowadays, it from a lot of the marketers that I talk to, they're still experiencing these same issues where they're kind of just flying in the dark and they don't know which direction to go into. And you have it's not just silos within the industry, it's silos within entire companies as well. Do you
Yeah,
see a
no,
lot of that?
same thing in freight. Like, I mean, it's siloed so much between the companies and within the company. And then even documents, like a lot of the documents are standardized, but there's still so much of that going from paper to, like, you take a photo, maybe it's PDF, but then it's printed again, and then it's like you have a paper, you take it, you digitize it, you print it, and it becomes paper again, then you digitize it again, like, because again, there is no digital unifying infrastructure rails that connect all these different pieces together.
And so I guess when we think about sort of the future of like freight and technology and sort of the intersection, especially when it comes to communications as well, where do you see, I guess, sort of all of these converging? Do you see them converging, or do you still see them kind of isolated in a silo for the foreseeable future?
I don't think it's going to happen overnight, but definitely like companies like Clear Now, Neutral, they are trying to address that. And yeah, of course, I believe in that future, and I believe that we are going in the right direction.
Now, I guess so, a couple last questions that I have for you, and it kind of hinted at, sort of earlier, is that for someone like me who watches, Shark Tank and all, I wonder from like a VC perspective, how accurate is that presentation format? Is there all the debating and you have to go through all of your numbers live on stage? Does that actually happen?
Yes and no. I mean, of course, like that pitch is an important piece of the process. Uh, and for many reasons, like of course, like you get your information, you get to know the founder, you get to hear their story, which is also important, but you also try to evaluate if they are a good leader. Like, can this person attract talent? Because which is very important. Like, are they persuasive, are they able to tell their vision in a way that can convince someone, for example, who has a good job with high salary to jump the ship and join a startup? Like, are they charismatic? So like you are trying to evaluate that as well. So pitch is very important, but I think the real sprint starts after that. So you
After
hear the
you get
pitch,
the
you
money.
like it, like you need to do your due diligence. Like
Hmm.
again, like we talked to a lot of customers, we talked to competitors. Like, let's say that you agree with that. Let's say that that founder has a unique insight or unique product, or like you like that market, but how do you know that that is the best business, best startup to back in that market? Oftentimes, like there are these things come in like waves. Like you see a lot of truck payments companies, you see a lot of load boards, you see a lot of TMSs. They come in batches in a way. uh, you want to pick the winner, you want to pick the best one you can. So we talk to their competitors, we talk to the other team members, of course we look at their numbers and this that, like we spend a lot of time doing due diligence, and then only after that we come to a decision to invest or not.
So if you are, if you're an entrepreneur or an aspiring entrepreneur in the freight space, what advice would you give to somebody who has an idea and they want to explore the possibility of getting funding for that idea?
I would advise them to start with a pain point,
Mm.
not a solution. Hey, like not I have an idea, like what is the pain point you are trying to solve, how big is that pain point? uh Oftentimes, like I think, and to be honest, like there are so many pain points in this industry that shouldn't be that difficult, right? So pick at a pain point that is very large and a lot of people are suffering from, and then you are passionate about. Because of course, like it's a roller coaster, things are going to go up and down, and you need to be passionate about what you're building, what you're solving, so that you keep going and you don't give up at the first sign of hardship. So like I would start with the pain point and the customers, and then go from there. And that will make your life easier, and it will make it easier to communicate to potential investors, and it will make it easier to get customers as well.
And should you build what, like an MVP first, or and
Of course, like
it's
uh,
not just an idea, you put it on
yeah,
paper and then you
yeah.
go to an investor?
It happens sometimes. Like sometimes, like some ideas are very good, and some founders are really good. Like and then like you want to be with them from day one almost, and you can write a check even at an idea stage. But in order to of course, if you just go with an idea stage and get investment, you're going to get it at a lower valuation because the risk is so high. But if you get an MVP, if you get some initial traction, then your valuation will go up. So you're not going to get diluted as much. So I would definitely suggest bootstrapping if it's possible a little bit until maybe you have some products, some initial customers. That would go a long way to, I think, increase the value of your business and also illustrate that there is a real pain point here and you have signals for product market fit.
And then, with all of that said, once sort of reach, I guess, the upper echelon of success, and that sort of, I guess, segues into my next question of like, the success, the overwhelming success of the All In podcast. Are you a regular listener to that show?
I wouldn't call myself regular.
So, well, I was wondering if that, because they've seen a lot of success with the show, and then of course, anytime you have more eyeballs on your product, you can talk about more of your investments and things like that. So I was also wondering if maybe you, from the sidelines, maybe looking in, if that is a signal to like other VC firms that they should start up their own podcast in order to be almost like the megaphone to the companies that they're investing in.
No, absolutely. I mean, that's a really good point. Or we can join forces with podcasts like yourself, who already
Yeah.
have an audience, and like tap into your audience and mention
Yeah,
our.
don't steal our
Uh,
thunder. All right, Barak, that was about it for the questions that I had. This was a fascinating conversation. I feel like I could continue talking to, about AI to you, and about the revolution and the evolution that I'm seeing for a lot of freight companies in this space. I think I'm going to do, maybe we'll have you on again in the future after I do a little bit of a roundup of, some of the executives that are talking about how they're using AI, because I think it's completely fascinating. So, looking forward to watching your journey and the journey of all the investments that you guys are making over at Autotech. But for folks who want to stay in the loop as well, where can they follow your work, follow Autotech, all that good stuff? Maybe send you a pitch too and be one of those 3,000
Yeah, no,
people.
thanks for reminding me that. So they can definitely follow me on Twitter, although I haven't been very active lately. But feel free to add me on LinkedIn. I actually have office hours, weekly office hours, and it's open to anybody. I have a calendar link on my LinkedIn profile. So if they search for me on LinkedIn, find my profile, there's a calendar link there. They can sign up for my weekly office hours. Again, it's open to anybody. They don't even need to pitch. If they might just get feedback on their idea, on their product. I would love to talk with them, and welcome anyone who would love to have time with me in my office hours.
Awesome. That sounds great. And that's really generous of you to be able to offer up time like that. But I imagine it helps, with getting awareness and staying on top of everything that's going on within the industry.
Of course, yeah, no, it's my pleasure. I mean, it's also like part of giving back to the community. So
Hmm.
I truly enjoy. Like sometimes you stumble upon things that you didn't think about, you wouldn't have been proactive about. So it's surprising. And then sometimes like you meet a founder very early, at the very early phase of their journey, and they come to your office hour and you give feedback, and they stay in touch and they start building a successful startup. And it's all about helping each other.
That's awesome. That's a great perspective, and a great attitude to have towards the industry. And I think probably a way to sort of break down some of those silos that we've been talking about that's been such a hindrance to the industry for generations. So, Barak,
Absolutely, absolutely.
thank you so
Well,
much for
thank
your
you.
time.
Thanks for having me. It's This has been a great conversation, and yeah, I would love to have future conversations on like maybe just about AI or other things in the future.
Heck yeah, I'm gonna be booking a slot on your calendar here in like the next 5 minutes.
Thank you.
All
Have a great
right.
day.
Well,
Thanks,
well,
everyone.
thank you, Barak. This was awesome.
Bye bye.